I just released a video on SentinelOne. It's been getting a lot of views. I mean, a lot for me, I guess. It's 1 out of 10. This is how YouTube does it. When you release a video, it shows you how the video ranks compared to the last 9 videos within the same time frame. Like, so if this video was uploaded 5 hours ago, it shows me the stats for the past 9 videos, the past 5 hours. I'll show you what I mean. This was actually uploaded at 4 a.m., so 7 hours ago. So in the first 7 hours, this video got 427 views. Like Pure Storage got 103 views. So obviously not a lot of views, but that's just relative to me. So SentinelOne, we could go through that presentation. I think that's a good thing to do. I like to go through the investor slides because it's a little more user-friendly, a little easier to read. 10Q is good too, 10Q and 10K, but this is just kind of it's a little more watered down, like a little more like visually a lot more visuals. The 10K and 10Q, you could find all the information in there. Sometimes you have to do a little digging though, but you could find a lot of info in there. This is kind of like more high level. So before I go to the presentation, let's just look on Yahoo Finance. I just want to see how the I always it's kind of a what's the term? When a stock has a 1 letter as a ticker, like T, like the letter T is AT&T stock, I always think those are good stocks. If it only has 1 letter, their ticker. This has 1 letter, SentinelOne. Usually it's older stocks with 1 letter. I always think like you have to be a special stock just to have 1 letter. I don't think that's actually true, but just kind of like, it's like a superstitious thing, I guess, what I'm trying to say. So it's not a small company, 7.3 billion market cap. Actually, let's look at Simply Wall Street, because Yahoo Finance hasn't been working that well. It like freezes up a lot. I don't know why, since they did that recent upgrade. So its last price, 7.3 billion market cap. So not a small company by any means, but definitely on a smaller side relative to most stocks, or relative to the whole stock market, I should say. Down 5% in the past week, down 19% in the past year. So it hasn't done that well this year, but it's a timing game. So let's just see. So it's been trading a decent amount of time. I haven't really heard about this company until I did the video this week. So mid-2021, it started trading. It looks like 50, which is a high for IPO. But oftentimes a stock will IPO like $20. And before it even gets to the public, people like me and you, it's already at $50. So it probably didn't actually start at 47. It probably started at a normal number, but a lot of institutions are picking up the stock before it gets to the regular folk like us. SentinelOne IPO. Let's just see. Okay, so June 2021, which is, yeah, this is June 2021. Okay, in June 2021, SentinelOne completed an IPO, raising $1.2 billion. It trades on the ticker S, which was formerly used by Sprint. So I was Sprint's old ticker. Tickers get reused. I didn't realize that till not too long ago. I figured that out. I thought once a company had a ticker, it could never be used ever again. But they reuse tickers, which I think is a little confusing. I wish they didn't, but I guess there's only so many combinations of letters. I mean, they could go out to like 5 or 6 digits at some point if they run out of combinations. But I want to know, what was the price, the SentinelOne IPO price? Does anybody know in the chat? Okay, $35. Sentinel. So that's a normal price, $35. It is actually a little high. Usually, I think its average is like $20. Like you'll usually see between 15 and 20 the IPO price, but still, but as you can see, we didn't even have an opportunity to pick it up at 35. As soon as it hit the market, it was probably already $50, which is kind of annoying because if you really like a company, like I really liked Facebook, and I bought it the day it started trading, but as soon as it started trading, it was already $40. So like it IPO'd to like 20, but as soon as I can buy it, even though I put an order in to buy it, but that paid off. I'm up like what? I'm up like 12x on that investment. Okay. I like to look at past stock prices, and the past has no indication on the future. Like there's no, just because a stock was $72 in the past doesn't mean it will ever be 72 again. But it's good to know. It's kind of like muscle memory. If you were, like if you played sports, say you were like a runner and you could run a 5-minute mile, and say you don't work out as much anymore and you get a little out of shape, and now you're running a 7-minute mile. Just the fact that you ran a 5-minute mile at one point, it's kind of like muscle memory. It's much easier to do it again if you did it once. I don't know. I don't think it's all psychological. I think it's just part of like your natural makeup. But the same thing with like learning a language. Once you knew it once, even if you forget it, even if you don't use it, it comes back a lot faster than if you've never learned it to start. But yeah, please comment. Let me know you're actually here. So Wikipedia is also a good place to just get high-level information. You're not going to find information on Wikipedia to value the company, but you'll get high level, because I think whenever you invest in a stock, you should really understand it on like a 10,000 foot level. You don't want to like someone to say, well, how do they make money? Which is really the most fundamental thing a company does, and you can't answer it. I mean, you don't have to know how the company makes money to make money on a stock. You don't even have to know anything about the company. You could just buy the stock, but it just helps you not only make a better decision for that particular investment, but in future investments, the more knowledge you have. So let's see. They're a cybersecurity company, which is obviously big now, cybersecurity. Who's the biggest cybersecurity company? I think I know the answer. It's on the tip of my tongue. They had the crash. Their servers crashed. Cybersecurity, and the stock went down like 50% last year. No, this year. CrowdStrike. They're the biggest, right? Cybersecurity, founded in 2013, so 11 years. The company, 2,100 employees. The number of employees, it does give you information, and you might think, why does that matter, how many employees a company has? But I give you an example why it matters. So say you're investing in a company with like 450 employees, right? And if they announce that they double their employee count, that's an indication. Savvy, what's up? Yes, CrowdStrike. Thank you. If we were talking, if we were having a conversation, and you asked me who the biggest cybersecurity company, I'd be like, CrowdStrike. I would know it. I can answer real fast, but when there's a camera in your face, you're not as kind of relaxed. At least I'm not. I'm definitely not that good in front of the camera. And I mean, I'm better, I guess. But so, anyways, so if you were investing in a company with 450 employees, right, and the owner said that we just doubled our employee count. We have hired another 450 that are due to start over the next 6 months. What would you think? I mean, you can't just look at the negatives. I mean, obviously a huge negative would be that's a waste of money if you don't need it. But you have to assume they have a lot of business coming up. Why would you double your payroll? So the assumption is that those employees will be needed to do certain functions. So that's it. Generally it's a bullish signal. If you're hiring people, it means you have either a lot of business that's currently needed, like you have a lot of demand, maybe some new contracts, or you might have a contract with Walmart, and it's not going to start till 2025, but they want to order X amount of product over the next 5 years, so you need to staff up. So that's why it could be a bullish signal. But of course, you have to think of both sides of it. If a company is overstaffed, which a lot of companies do that, and they have to cut staffing, so but generally with a small company, if they're growing employees a lot, it's usually because they have a lot of stuff in the pipeline. And they would probably say that if you did read their investor reports, they would say, and they always talk about stuff like that. They always say like, oh, we just signed a new contract with Ford, or we just signed a new contract with so and so. So SentinelOne, let's go to the chart again. So when I invest in a stock, I don't just I do look at the past price because I think it's helpful. And just because it hit 72, some people I asked, like, what's the reason you invested in the stock, right? And they'll say, well, it was $72 at 2 years ago. It was $72. So if it gets even back to half that, to 35, I'll be up 30% of my investment. And they're right, but you can't just use that as your basis for investing in a company, just because it was this price in the past. And I'll give you even a worse example. This happened on my channel. There was a what was it? It was one of those shipping stocks. You know, there's these shipping stocks that were constantly doing reverse stock splits because the stock price gets really low. So to give you an example, say in 2022, the market cap was $100 million, right? And it was 50 million shares. So the price, the stock price was $2. One share was $2. 100 million market cap, 50 million shares. So each share was $2. And then in 2023, the stock started going down a lot. It was the market cap was down to 25 million. Still 50 million shares. And now the stock price is 50 cents. So when a company's stock price falls below $1, they may get delisted. It's usually not a good thing if your stock price is below $1. Not just because you can get delisted, because getting delisted, it means you can't trade on a major stock exchange like the NASDAQ or New York Stock Exchange. You have to go to the pink sheets. Not as much activity on the pink sheets. But there's other big reasons why you don't want to fall below $1, even fall below $5, really. But so what happened was they did a reverse stock split. One reverse stock split. So 2023 pre-split. Post-split. So they did a 4-for-1. So now, now the number of shares goes down by 4, but the stock price goes up by 4. So now you have 12.5 million shares. They're trading at $2 each. So if you look at the market cap is shares times stock price. So it's still 25 million. Let me just color code it. So like on one day, the stock was 50 cents per share. The following day, it's $2 per share. The stock didn't go up, even though there's going to be a lot of people on the chat boards and on Reddit or Yahoo Finance saying, "Oh my God, my stock went up 300%. I made a lot of money," but when they look at how much the stock is worth, it didn't change at all. So when you go, if you looked at the stock chart, right, in 2022, it doesn't say $2 a share. Does anybody know, if you were going to look at a stock chart, like what this 2022 stock price is? Yeah, that happens to all of us. That's how you learn. I did that too. I know someone did that. Someone said to me, "Oh my God, I'm up like 1,500%. I put $100 into the stock. Now it's $1,500." And I said, "It's not $1,500. Look at the stock. It's still $100." They're like, "Oh, well, why is it only 100? The stock went up 1,500%. I'm like, "Because stock split, reverse stock split." So if you look on the stock chart, when I say stock chart, I mean like something like this. And the price in 2022 is not $2 anymore. Does anybody know what the new price is? Yeah, exactly, 8. Because everything before the split is multiplied by 4. Because they have to multiply. This might have been on May 22nd. This was the price. Let me just put it in here. So on the stock chart, on May 22nd, the stock was 50 cents. But they like what's his name? Godel said, it's not going to even say 50 cents. It's going to say $4, $2. So if you look at the chart in the past, on May 22nd, it says $2, even though it's 50 cents on May 22nd, because everything before May 23rd is multiplied by 4. So it's all stock split adjusted, because it wouldn't make sense if they didn't do this. And then the stock trades and say the following year, it happens to be May 22nd, the year later of 2024. And again, the stock price goes down from $2 to 50 cents. Oh, this worked out. I didn't have to even do anything. It does all the calculation. So once again, it goes down to 50 cents a stock price. Wait, let me. Okay, so the market cap. That's why you just look at market cap. Don't worry about stock price, because stock price is misleading because of stuff like this. Look at the market cap. The market cap is 6.25 million. So they do another reverse stock split. They do another 4-for-1 reverse stock split. It's still 6.25 million on May 22nd and 6.25 million on May 23rd, the following day. But the difference is on May 23rd, there's less shares in the market. Instead of 12.5 million, there's 3.1 million. Newer price. So now, there's 3.1 million shares at $2 each, but they did another 4-for-1 stock split. So what happens? Everything before May 22nd, 2024 has to get split adjusted. So now what KPIs cause a stock to underperform? What's major? I should get back to that. So if this keeps happening, the number of the share price kind of blows up. If they keep doing these kind of reverse splits. So I remember I was talking. I was saying the stock is is worthless. It's garbage. The stock. I don't know. It was totally overvalued. And then this is when a company does a lot of reverse stock splits, it tends to be not the best company by far. So someone commented that he's buying the stock because at one point it was like $10,000 a share. So he's like, and it was trading at like $1 right now. So he's like, it doesn't matter even if it gets back to $1,000 a share. He's going to make a ton of money. And I was like, it never was $10,000 a share. I go, it was never even close to $100 a share at any point. The only reason it looks like it was $10,000, in the past was because of reverse stock splits. But he didn't understand it. So he just said, oh, no, the chart says 10,000. So it has to be true. But no one would ever, it's so rare that people make a mistake and ever say, oh, you're right. I made this mistake. They always have to kind of like say, "Oh, you don't know what you're talking about." They have a low PE, so the company's great. You don't. A low PE means it's a great value, or they always have these kind of like. Okay, so let's go back to SentinelOne. It kind of a long tangent on. Well, let's learn in plain English. Hopefully, Wikipedia will be in plain English. So cybersecurity, what exactly do they do? The company uses machine learning for monitoring personal computers, IoT, Internet of Things devices, and cloud workloads. It uses a heuristic model. So heuristic is a technique for problem solving more quickly than other methods. Specifically, behavioral AI, they offer AV Test certified. AV Test is an independent organization that evaluates and rates antivirus and security suite software for Windows, Mac, and Android systems. Okay. So all the buzzwords, all the kind of like AI, machine learning, these are kind of cloud. These are kind of the big words that people are investing in. So they acquired Scalar for $155 million. That's a cloud scale data analytics platform. That's what you notice, like with every company, they acquire so many companies. You only see the big ones, the ones that make the news, the $10 billion acquisitions or $50 billion acquisitions. But companies acquire so many, like sometimes hundreds of companies. So in March 2022, SentinelOne announced the acquisition of the identity detection and response technology company Attivo Networks. So that was a bit more, $616 million. Attivo Networks. In November 23, they acquired Krebs Stamos Group, founded by former CISA Director Chris Krebs and former Facebook Chief Security Officer Alex Stamos. I wonder if he's related to John Stamos, which was rebranded and relaunched as Pinnacle One Strategic Advisory Group. PingSafe, I know that was an acquisition I saw in their 10Q. PingSafe. That was a $100 million acquisition. They've been the official cybersecurity sponsor of the Aston Martin Cognizant F1 team. So they sponsor the racing team car. And you go to the website if you ever want news. Let's go through that presentation. So what KPIs cause a stock to underperform? I don't know if oftentimes the reason stocks go down a lot is usually not the fundamentals. It's usually because it was really overvalued at one point. That happens a lot when a company IPOs. Sometimes there's a huge buying spree and the stock goes way up, and then there's a big sell-off. A lot of big like hedge funds or institutions, they make a lot of money, more of just driving the price up and then selling it before everybody else gets out of the stock. Usually a company is not valued at the appropriate level right off the bat. Like they went up real high, and it should have never been that high. They were never worth that. So then eventually it's called, the market is pretty efficient. So efficiencies come into play and the stock price kind of adjusts to where it belongs. And usually it comes down further than it should. So it got down to $13. And that was a price point a lot of people thought it was a good value. And then it runs back up, and then there's sell-off. And it's just market dynamics. And a lot of times people do buy stocks or institutions buy stock when there's a good news story, like, oh, they have a new partnership with Google. So there's a lot of buying. And then when people realize nothing changed with the company, even though they have the relationship with Google, then they sell off the stock. But don't try to time the market. You can't really win that way. People think, oh, okay, I could just, I could do the same thing. I could invest in a stock. When it goes up a few 100%, I'll sell it. Then when it goes down, I'll buy back in. Doesn't usually work out that way. You end up losing a lot more money than you could have if you just held long term. Okay. So they have AI-powered security enterprise platform. So secure global businesses. So here's their racing. F10, that's the racing team, right? Is that what they're talking about here? So they have a lot of customers, 1,200 customers that spend 100K or more. So that's a decent amount. 100 customers that spend 1 million or more. The ARR is the annual run rate. Let's just let me just look at this closer. Let's do the math just to make sure this just ties out. I want to see their annual revenue. Okay, annualized recurring revenue. I want to see actual, not projection. Is this actual revenue or gross margin? Okay, I don't know. I don't even see it. Okay. Okay. So they're 770 million is their annual revenue as of 10/31/2024. So as of the trailing 12 months, that's their revenue, 770 million. I just want to make sure these customers are real customers and not just customers 100K, because that's saying 1,200 customers spend 100K and 100 customers spend $1 million. Okay, some. Okay, so that makes sense to me. So if they have 1,200 customers that each spend 100K, that's 123 million of revenue from those customers. And if they have 100 customers that spend $1 million, that's 100 million. So that's the sum of those two is 223 million. And their trailing 12-month revenue is 770 million. obviously they probably have a ton of customers that spend like $30K or $20K or $500. They even say they have tens of thousands of customers. So most of their customers don't spend that much money. They might have 25,000 customers. They say tens of thousands. Let's go with 30. And let's just pretend the average customer is 10K. So that's kind of close. They're 770 million. Actual revenue. Hey Blade, Merry Christmas. But this is good to do on your own, because I'm not saying I'm looking for mistakes with the company. I mean, it's possible they make a mistake. I'm just you really understand the company really well. Like I'll remember this, what I'm doing right now, probably for a long time, because I'm actually putting into practice. Like, I don't know exactly how many customers they have. Let's pretend they have 30,000 customers who spend 17,000 each. 18,000 each. That's the average. Because we know the big ones spend 100, spend $1 million each, and then 1,200 spend 100K each. But they probably have a lot of customers who spend like just a few thousand. Maybe some spend 60,000, 70,000. So if you do the math, it makes sense to me if I sum up these. So if I was to guess, I'd say they have anywhere between 30 and 40,000 customers. But they probably mention it somewhere. But these are good things to do, because say next year they issue a report saying their total customer base is 1,800. Then you knew mathematically there's no way they can have $770 million of revenue with 1,800 customers. Because they would need an awful lot of customers. Because just these two, which they provided us this information, these two equal 223 million. It might equal more, because these 100 customers, maybe some of them spend more than $1 million. Maybe some spend like 5 million. But sheesh. Okay. I asked GPT and said, is this SentinelOne? Yeah, SentinelOne farming education. Okay, so partnering across the cyber ecosystem, approaching 1 billion ARR. Yeah, they're at 770 million we saw, so they are approaching 1 billion. I always have a hard time, like, is a company growing revenue because they're selling more of their products, or are they just buying other companies? Because I'm not saying it's bad to buy other companies, but it's not that impressive to do that. Because if you said, oh, my revenue went from 1 billion to 2 billion, I would be like, wow, that's really good. But then and then if I said, well, did you do any acquisitions? And you said, oh yeah, I bought another company, and I paid like, $1 billion for another company, and that other company has, 1.2 billion of annual revenue. So that implies that their revenue went down. If you acquired a company for that generates 1.2 billion revenue, and you did 1 billion last year, that means you only did 800 million this year, and that's why you're at 2 billion, because you acquired this company. So that's not that impressive to me. But if you grew it organically, like Apple, most of their growth is organic. Yeah, definitely, it's useful, Godel. That's what I'm saying. Like when you look at like revenue over a long period of time, or customers over a long period of time, it's so hard to know how much of that was organic and how much of that was through acquisition. That's why when you look at like a business like McDonald's, they usually use the term same store sales, because it's not that impressive if your sales went up just because you open more locations. Of course, your sales should go up if you have a lot more locations, but if same store sales are going up a lot, that impresses me a lot more. Because if overall revenue is going up, but same store sales are going down, it's not that great. That indicates that you're not running an efficient business, and each store is doing worse, or you're cannibalizing certain stores possibly. Like I remember at one point there were 300 Subway restaurants in Manhattan, and the franchisees were complaining that corporate kept opening stores, and then it was like making it harder for each store to be profitable. Seeing how so here's CrowdStrike right here. Old legacy, the McAfee, Symantec, McAfee. Who's the other? There's another. Who is a? I probably have them. There's another company that's like on McAfee's level that has been around for like 20 years. What the hell? Norton and McAfee. They forever they've been around. I kept paying for it too. I kept paying for their service, and then I was like, then I was reading, if you buy a new computer, you don't need those anymore. It's already kind of part of the computer has it all. I wonder why they put Symantec and not Norton. Okay, so now people are moving towards Microsoft, CrowdStrike, and Carbon Black. What's Carbon Black? VMware. VMware is Carbon Black. Because you want cloud-based services. Like these old services, you would have to like you get like a disk, and you'd have to download it. Now you can download it on without the disk, of course, because who uses disks anymore? But you want cloud monitoring, so you want it where you're always protected, not just your computer, also the stuff in the cloud as well. So their product, SentinelOne, Purple AI, AI on device plus cloud, unified data platform, technology that scales people, machine build context and response. Yeah, Norton. Yeah, that makes sense because this looks like Norton's logo. I was thinking that this is probably Norton. Carbon Black is Broadcom. Well, Broadcom. Broadcom owns VMware. VMware has been shopped around a lot. In October 2019, Carbon Black was acquired by VMware. VMware was acquired by Broadcom. Am I saying that right? In November 2023, Broadcom acquired VMware for $69 billion. Was it Dell that acquired? Okay, yeah. So Dell acquired EMC in 2003. EMC owned VMware. So as a result of acquiring EMC, they acquired VMware. And then Broadcom acquired VMware. Because VMware, what's it called? Spun out into its own separately traded entity. It used to be part of, it used to be part of EMC. EMC sold 15% of VMware via an IPO, but it was still under EMC's umbrella, VMware, because when Dell acquired EMC, that was part of the combination. Yeah, since 2023. Yeah, they paid $69 billion, but I think Dell paid close to that amount when they bought it in 2003. I think, in January 2024, in terms of definitive agreement, EMC acquired. Okay, so in 2004, EMC acquired VMware. And then in 2007, EMC spun off VMware to its own company. I should have like a chart, like you have your family history, like you have your mother, your father, then the kids, then the grandkids, the grandparents. I was thinking of doing that for like companies. Spin-offs. So this is at the forefront. This is big. SentinelOne could be a $500 billion company. Like, because remember that company NVIDIA, when it was just a couple $100 million, and now now it's massive. It seems so obvious, right? Oh, why don't I just buy NVIDIA? It's so obvious now, but at the time, it didn't seem like that good of a value. But But I was totally wrong. Their stock price is worth it because of the amount of money they're generating. Okay, leader in AI-based security, behavioral AI, generative, and static AI. Static AI is a first line of defense and blocks 90% of ransomware. And then it gets more advanced as they go up the ladder. Generative AI is their purple AI. Autonomous security analyst accelerates and enhances all security operations. Resilient architecture, our AI-based security, 0. Wait, what's that mean? Average daily content updates. So they don't update their content. Is that what it means? Alternative approach, 10 to 12 updates. I'm not sure what this chart is trying to convey. I think it's trying to say that we don't need to update our software. It's already bulletproof, where these other softwares are constantly being updated and as they learn more information. It probably means something else because that doesn't sound right. If anybody knows what this chart means, let me know. Because they're saying their AI-based security, superior protection, operational stability. And the alternative, constant updates, higher security risk. But I always thought updates were good because as you're learning, as you evolve, you want to get more. It's kind of like if you run a business, each day you're learning something new and you're improving. But they probably mean something else. 0 delays in configuration changes. 2023 MITRE attack evaluations. Yeah, CrowdStrike had that big problem. Basically, theirs are so good, they don't update as much. The AI is updating without having. That's what I was thinking. It's more of an update in the background, not like a new, kind of like when you had the Microsoft, like remember Microsoft product? It would be Microsoft 3.0, then 4.0, then 5.0, then Microsoft 95, and it kept doing that. So I guess that's what it's just trying to say is that they don't have new versions. They're just constantly, they're updating more in the background. When was the CrowdStrike crash? In July 2024, that's when CrowdStrike crashed. Yeah, okay. Guessing they are saying the AI security is making the updates that the alternative approach is manually making. Yeah, Blade, I think it's something like that. I was thinking that, but I was in my head, couldn't really explain it, so I wasn't going to try to explain it. But yeah, something like that, where, like in my example, like when you had Microsoft Suite, 3.0. If you wanted the newer suite with the better Excel, you would have to buy the 4.0. You can't just 3.0 won't update automatically. That's a long presentation. Sheesh. We didn't get anywhere. Okay, let's see. 2024 Gartner Magic Quadrant for Endpoint Protection Platforms. It always looks so impressive. A lot of stocks, when you go through these presentations, and you have to trust them. You can't just say, "Oh, they're lying. This is not true." You have to trust them. But I don't know. Comprehensive platform breadth and coverage. Purple AI. So it's a big TAM, total addressable market, 100 billion. The endpoint security market, 17 billion. Data analytics, 31. Cloud, 12. Generative, 3. So 50 billion, and then next year the forecast is 100 billion. But if you think about it, like, so they're closing in on 1 billion of revenue. Like if you're like, I want to find the next $1 trillion stock. Is this the next $1 trillion stock? NVIDIA's revenue for the trailing 12 months is 63 billion. So, I mean, if the total market's 100 billion, even if they had 100% of the market, that's like the only way to get to that $1 trillion, which they wouldn't have 100% of the market. Maybe they would have 10%. I mean, at the very most. So you got to look at TAM also. If you, you know, it's kind of like if the market for EV cars is this, then you know, like, it just, whether it's even possible for the company to grow to the level you think they want to grow. Or if a stock like a Tesla is, you know, closing in on $1 trillion market cap, and the entire market, even if they had 100% of the market, it's still not worth $1 trillion. Then you might think twice about buying Tesla. But of course, the people who own Tesla will say it's not a car company. It's a software company. It's not about making cars. It's about making, you know, so if you think about it that way, I guess, but whatever. A new dawn of cybersecurity, state of cybersecurity, not a solved problem, breaches and outages, disjointed platforms. I think that's like with anything, with every industry. There's no industry that's smooth and there's no problems. I own Tesla. I think Tesla owns Bitcoin still too. Yeah, I know they've owned Bitcoin at one point. Let's see. Let's see that 10K. Okay, Bitcoin is not listed in the 10K. Let's see if crypto is listed. In December 2023, what happened? They asked you guys. Maybe they don't anymore. I thought they did. Well, let's look at the balance sheet. It has to be on the balance sheet if they owned it. Is this, am I looking at the right balance sheet? Tesla. Okay. Current assets, cash and cash equivalents, short-term investments. I'm pretty sure it's it would be this probably digital assets, 184 million. Or maybe it says, it looks like they sold proceeds from the sale of digital assets was 936 million. Or maybe they sold it, most of it. Not all of it, but we currently account for all digital assets. Well, they have to hold digital assets like crypto similar to the way they hold land. It's held as a long-term asset that doesn't get like you cannot increase the value of the digital. Like if you, it's exactly like land. Like if you buy a piece of land or Bitcoin, say for $1 million, you can never increase the value, even if you paid $1 million and it's worth $100 million, the Bitcoin. Like say 5 years later, went from 1 million to 100 million. You can't raise the amount on the balance sheet. It has to. You have to carry it on the balance sheet at your initial cost. When you sell it, then you do realize the profits on your income statement. But on your balance sheet, you can't increase the value. You could decrease the value. Like if you bought $1 million of Bitcoin and say the following year it was 500K, then you would decrease the value in your balance sheet, but you can't increase it. The only way you can increase the value of your crypto is if you buy more crypto. So say you had $1 million of crypto. The following year, that value of that crypto is 500K. Well, let's just say, let's just keep it simple. Say you have $1 million. Next year, it's still $1 million, but you add 2 million of crypto. So now you have 3 million of crypto. So that particular crypto cannot be worth more than 3 million on your balance sheet. Those actual coins, unless you buy more. So it doesn't say, it just says digital assets. It doesn't break it down. I thought it would have broken it down, but yeah. So they hold digital assets as an indefinite lived intangible asset, which is a definition of land. We have ownership and control of digital assets because land has an indefinite life. There's no depreciation for land. It's if you buy a building. A good way to think about it is if you, I'm actually doing this, I'm the controller for a real estate developer actually. So this is what we do. But say you buy land for $1 million and then you build a structure on top of the land for 3 million. So the cost basis on your balance sheet is 4 million. But you would depreciate the building. So every quarter, so say this is 1Q24. And 2Q24, it may be 3.9 million on your balance sheet. The building gets depreciated. Land never gets depreciated. You could decrease the value of land, but not through depreciation. Let's see if they talk about it here. So ASCII 350 is how they account for digital assets. We determine the fair value of digital asset on an accurate basis based on accordance with ASCII 820 fair value measurement based on quoted price of the active exchange that we determine in the principal market. We perform each quarter to identify whether events or changes, circumstances principally decreases the quoted price. They can never increase it. So they say it right here. So each quarter, so that's how it works for land or digital. You test for impairment. It's a little harder to do with land because it's not like an active market for the land you bought. It's easy for a crypto to impairment. But if you looked at the land, you tested it for impairment, and you said, well, the market rate for this piece of land in this area of the country is $800,000 now, not $1 million, then you would reduce it. You would impair the asset. So you would that $200,000 that you reduce from the land, you would pass through a loss on your income statement. Same thing with the depreciation. You would pass through an expense every quarter. It looks like we're doing $100,000 expense. Onto the income statement. So it just reduces your net income. I found an article, they still own Bitcoin. They probably do. They're just not saying that we know they own digital assets. The FASB, the Financial Accounting Standards Board, is changing the guidelines. Yeah, I heard that too. Digital assets must not be marked at fair value. Instead, they're being marked down. Well, they definitely are marked down if it goes down. They're not depreciating crypto. You can't really depreciate a intangible asset, but they are impairing it, because depreciation is only for a fixed asset. Is crypto? Yeah, I don't think that's possible, but I think they may. It's mark to market. I think the term is crypto being depreciated. Bitcoin, the most frequently traded currency, has largely contributed to drop in market value. What does crypto? You ask ChatGPT, but I'm like 99% sure crypto can't be depreciated. It just doesn't make sense. Because it's an intangible asset, and the definition of intangible, yeah, but I've been wrong before. Yeah, exactly, Blade. It has to be mark to market, either up or down depending on the value of the asset. And it's a pretty easy to asset to value because we know the price of any crypto asset in the market. It's hard to mark land because it's just not as active a market. That's why you can find some inefficiencies on balance sheets, because sometimes they overdo it when they mark down land or when they depreciate an asset. That's how you cook in your books. Like a lot of companies have done that. It's the easiest way to cook your books is to aggressively depreciate assets. Because why does aggressively depreciating an asset help you? Does anybody know? Because how does it really help you? Think about it. Because say $100,000 of revenue, right? Say you have a small business, operating expenses, all the expenses. To run the business, you have payroll, you have to pay rent to rent that space, you have to pay gas, all these expenses. So operating income is, why does it keep doing that? Taxes, exactly. Is land the best investment? That's what all the old timers say. I wouldn't go that far, but it could be a really good investment. But how does it really save in taxes? Because yeah, Godel. That's pretty eloquently written, Godel. Did you Google that? I'm not trying to. If it was from your head, that's impressive. It's well written. Yeah, it's pretty much ChatGPT. Because say this is your 2024. This is your 2024 with normal depreciation, because part of the operating expenses is depreciation. And I'll put aggressive depreciation. So say instead of, because part of the 70K, let's just say 10,000 of the 70K is depreciation. But instead of 10,000, you opted for 20,000 of depreciation. So that raises your operating expenses, which lowers your operating income. And I'm just making it simple. Say you always pay 30% in taxes based off your operating income. I know it usually doesn't work out that way, but I'm just going to assume to make it easier. You always pay 30%. So in the normal situation, you paid 9,000 in taxes, but in the aggressive depreciation, you paid 6,000 in taxes. So you save $3,000. That's less money you sent to the government. It doesn't make your net income look good, which you probably don't care about. But if you have investors, then they would question this. They'd be like, why is net income down? I thought it was going to be $21,000. Now it's $14,000. And then you would say, no, don't worry about it. It's just accounting. It's not real cash. I just added 10,000 depreciation, so we pay less taxes. So now we have an extra $3,000 to work with. So this is pretty much how it works. But in the long run, it doesn't help you, because at some point, it's like if you're using the $10,000 now, but you're taking that away from the future. So in the future, like if you did things normally as you would expect, the normal depreciation, you would pay $9,000 this year and then maybe $6,000 in like 5 years. But instead, you're just taking it now, which a lot of companies do. It's not a new thing. A lot of companies kind of massage the books, and it's not illegal the way they do it. And I've been at companies, say our revenue target is 100K for the year, right? That's what we just have to hit, so our investors are happy. And let's just say on December 20th, we have a new customer, and they order 100K of product. A lot of companies wouldn't book it because they already had 100K. And I know, no, sorry, I didn't mean 100K. Say they order 10K of product, a brand new customer. So they would say, let's hold that for next year, because just in case, next year we're struggling, I want to have an extra 10K as cushion. So they just push it over to the following year. It's not really illegal. It would be illegal is if they got 10K of orders and they put 14K. I mean, that's blatantly illegal. Or they had 80,000 expenses, but they changed it. Like, you can't. That's not right. But you moving revenue over, no one's going to know the difference. As long as a company, yeah, I'll be right back. Okay. But just to add to the confusion, so depreciation does save in taxes, but impairments don't give you a tax break. That's why, like, if you saw a company with 100K in revenue, and let's just say they had operating expense of 100K, and then they have an impairment. Say it was a $50,000 impairment. So their pre-tax income is $40,000. I mean, their pre-tax loss is $20,000. They pay taxes on the operating income. They don't pay taxes based on they would strip out the impairment to calculate taxes. So that's why sometimes you see a company with a loss, a pre-tax loss, but still pays taxes. Then you might see a company with a profit and they get a tax benefit because that's stripped out when you calculate your taxes. That doesn't help you. Depreciation helps you. Chat, GPT, Grok, Perplexity, and sometimes Gemini is what I use. All have different strengths and weaknesses. Just a little kind of like but it's usually not clear. If you look at the income statement, like sometimes it's clear. Sometimes I've seen companies with a big loss and they pay taxes. And if someone says, how can you pay taxes with a big loss? I would say, because the reason they have a big loss is that impairment. You have to strip that out when calculating taxes. But sometimes it's not as straightforward as that. Sometimes there's a lot of other things going on. Is this interesting or is this confusing? To go one step deeper into the depreciation, that's how like a deferred tax asset and a deferred tax liability come about. Oftentimes, because the GAAP, which is generally accepted accounting principles, that's how U.S. companies report their financial statements. Public companies. If you're just a mom and pop store business, it doesn't matter. You can just do cash accounting. But U.S. publicly traded companies have to use GAAP. So the way GAAP depreciates an asset is different than the way IRS depreciates an asset, and that's why you have these adjustments on your balance sheet where you carry the tax liability or the tax asset till the following quarter or following year. Because it's I can't remember. This is good for me because I forgot how the IRS depreciates an asset. I think it's I'm pretty sure, I'm going to Google it, but I'm pretty sure they depreciate on a straight line. Actually, I'm almost positive. Well, this is going to help me. Let me, I just Googled, I have notes on my phone. I just Googled myself, all my notes on deferred tax assets. What do you mean that you added depreciation back? This is okay. This is my my notes on deferred tax assets and deferred tax liabilities, in case anybody's curious. So DTA and DTL. So these are balance sheet items from overpayment or advanced payment of taxes. Okay. So yeah, it's the difference from GAAP accounting and IRS accounting. So deferred tax asset is a temporary difference carried on the balance sheet that will be reversed and passed onto the income statement to reduce net income and save money in taxes. So the deferred tax asset will save you in taxes in the future. The opposite, deferred tax liability, will increase your taxes in the future. I'm pretty sure they do a straight line. How does the IRS depreciate an asset? I'm pretty sure they do it straight line, where companies can do different. They can do more aggressive accounting depreciation, which they usually do. What depreciation method does IRS use? If you're depreciating an asset you place in service before 1987, you must use accelerated cost recovery system or the same method used in the past. Yeah, so they use straight line. This is straight line. This is pretty much the definition of straight line right here. So let's make it easy. Okay, so say the cost of the asset is $110,000. If you guys are in Accounting 101, this will help. The salvage value at the end of the life, it doesn't always have a salvage value, but if you have an accounting course, they probably will add salvage. So you subtract the salvage value from the cost basis. Why does it keep doing that? Okay. And then if it's a 10-year, there's different rules, but say this particular asset is 10-year life. So then you depreciate $10,000 a year over 10 years. So the book value of the asset after 10 years will be $10,000, the salvage value. So if after the first year you would depreciate 10,000, so the book value after the first year will be 100,000, because the original value is 110,000, and you keep minusing 10 until you get to $10,000. But U.S. companies could do double depreciation, or 1.5 times. So if you're a U.S. company, instead of doing 10,000, you might do 15,000 a year. So your book value would go down faster, and that affects your financials. So you have to carry the deferred tax asset liability, and In the long run, they're the same exact number. It doesn't, but in the interval, in a 1 year, 2 year time period, it could be different. Okay, I guess customer mindset is evolving. Real-time security and resilient architectures, technical. So yeah, endpoint security, 13 billion market size, untapped opportunity, 7 billion. So half the market is with legacy companies like Broadcom, and these other companies I'm not too familiar with. Microsoft is a quarter of the market, CrowdStrike 18%, SentinelOne 4%. So I guess they're trying to get more of the market. Strategic OEM partnerships expand market presence. So they have a partnership with Lenovo. 2023 PC shipments by top 5 brands. Oh no, they're just saying what the top 5 brands are. Lenovo shipped the most computers, then HP, Dell, Apple, and Asus. What about Microsoft? They ship computers. Is this talking about something else? Okay, I don't know. So cloud, 12 billion total addressable market. $10x average revenue expansion in 3 years. Lots of graphs. Makes you feel like, okay, all these graphs, I think the stock will 10x. Here's the executives at the company. How we have protected enterprises this year. Trillions of signals each year. $500,000 blocked attacks. Security and data challenges. Autonomous SOC. SOC. What does that mean, SOC? SOC. A game changer for cyber defense. Security Operations Center. Okay. Security Operations Center. So here's a visual of. So 3 years ago, they had 334 customers that spent 100K. Now they have 1,200. They had 23 customers that spent $1 million. Now they have 109. So these are hard numbers that you can kind of sink your teeth into. Average per customer. So customers are spending last year 30K, or 3 years ago they spent 30K. The average customer now it's up to 60K. So that's good. I don't know how much is through acquisitions, through organic, but I guess growth is good. Either one it is. Here's their revenue growth. So 2022, it almost doubled, like maybe up 90%. It didn't really grow much from 2024 to the trailing 12 months. Gross margins going up from 63 to 79. They're still operating at a loss. The operating margin was negative, but now it's getting close to break even. Free cash flow margin, that's almost break even also, negative 1%. So it looks promising. I know a lot of people. I just did a video on Frontline, the shipping company. I think they only ship oil and natural gas, or liquids. I don't think they ship. I don't think they do dry bulk. Yeah, I just did. It looks interesting. The stock is down a lot, so the yield is like 14%. Yeah, I think it's like 14, 15% because the stock price is down like 50%. So the yield is up so much. But okay. So sounds good. So it's been an hour and a half. So it's been a while. So yeah. So I'm probably gonna do on Saturday with Victor. Victor has a channel. So hopefully on Saturday I'll see you. Thanks for watching or commenting. I'm getting kind of hungry. So I'll talk to you later. Okay, see ya.